Hello from Marissa Income Takes Invest. We're talking about investing, finance, and professional growth for today's items only. The investment I'm going to talk today would be Tesla, ticker TSLA. So it's been a while since I last covered equity, and with respect to Tesla, which is a relatively sizable of my portfolio holding in equity. So I want to quickly dive into the technical fronts to see with respect to the all-time high surge that we've had experienced today, obviously driven by a lot of the media affectation, but the real reason is really, the technology and high growth, high tech, and high cap stock sector rotations that we're seeing across the spectrum, right? In addition to Tesla's up about, basically 12 or 13% today, or even more as we got to the $1,045 mark, which is technically all-time high that we have formed so far. Across multiple other stocks, like Coinbase, like Facebook, like Google, these are all up respectively as well. But the high growth stocks are more driven as well, and you see PayPal is also up enormously today. So Tesla is definitely a market driver. It's driving up the whole index to go up, which is one of the foreshadow that a lot of economists saying that the S&P 500, the Dow Jones Index should technically continue to reach all-time high as we're seeing some sort of a Santa Claus rally or the sector rotations that we've been talking about. Q4 is typically a positive quarter for equity, but also for crypto as well, which we also see that on the crypto side of the house earlier today as well. So let's just go talk shop real quick, shall we? Despite it's all great and all victorious, if you may, that we are breaking all time high at $1,045 mark earlier today. We're selling back down by like $20. Basically at the $1,027 mark right now. But what is the next logical move, right? In terms of momentum and in terms of ultimately investing is about risk managing, right? How does the risk profile look like right now? Let's just dive straight in, shall we? So on a high level recap, I would say the risk is crazy high right now. We are just astronomically up in space at the moment with respect to the technical fronts. On our RSI scale, we're basically at the 92 out of 70 right now. And if you compare that in the historical trends, right, every single time we broke all-time high, last time we broke to the peak was basically about like 83 out of 70. And if you go further back, let's go further back, shall we? When we attempt to break that little peak with the sector rotation that happened earlier last year, we were at the 84. So every single time when we got to the peak, when we were running really hot on our RSI scale, we're at the 83. So right now, we are basically at the 92 or 91, if you may. We're basically reinventing the wheels. We are basically reaching a next level of risk, right? So on top of the fact that you see that we formed that golden cross, which is the reason why we are seeing this leap right now, and the sector rotation. So the timing is relatively perfect, and it's a logical thing why this is happening at the moment. And I would say this is a mixture of sector rotations, but also public investors FOMOing in, right? We were kind of hovering around like the high $900 today, but as we got confirmatory signal on some of the contracts and some of the positive news that Tesla has confirmed, also being supported by the positive earnings call that we've had for Q3. So a lot of mixtures that happened and the tech rotation drive up to be above 1,000. As we got to 1,000, we immediately got up to the $1,012. As we got to $1,012, people on the public start to FOMO in, which is the reason why you're seeing this large volume. So right now, I would say with respect to the risk management level, I think the risk versus reward ratio is not the most favorable if you want to buy right now, knowing the fact that I know we broke 1,000. I know that we are running really, really high right now. We could technically continue to leap for the next couple of days. But I think, did we miss the boat technically? I would say now, yes. I think the more logical level would have been to buy when we were relatively more of a depleted level, right? Back in the day when we were at the $540, which was technically a dip at the bottom, right? They've been surging ever since because of, again, right, as we got to Q4, sector rotations and the tech stocks is always off the time more predominant on capturing that sector rotation. So not the best logical level. And also on top of the fact that I do see some sort of a correction coming because of the fact that we have a gap And whenever we form a gap, this is not a good sign because anytime historically when you form a gap, you have to fill the gap. So eventually you're gonna have to fill the gap. So technically today, if you were to take some profit, is a very logical thing to do. I know, but despite if you want to be a long term investor, I know Kathy was said something about like Tesla could hit technically $3,500 mark after the split, right? Technically, we could still like 3x from here. It's logical, but is it anytime soon? I would say no, because we need to cool back down on the RSI front, and we form a huge outlier right now, right? So if you want to dissect, the technicals on the consolidation zone, which we will leap down to technically, I think firstly we will go down to basically obviously the 940 or 950, which is the leap up as we open the market today, right? When we need to fill this, so I think ideally dollar cost average at the as we break below 900, which I hope that we should, because we need to cool down, would be at the 894. The reason we say this is because this is a consolidation zone that people were contemplating on should we break above 900 again, which technically was the previous all-time high. And as we broke that, we immediately got to the 950, which is the reason why you're seeing this gap right here, because as the market opened on the international side of the world, I think overseas specifically, we got to the next leap up, and technically, as we got there, public investors start FOMOing in, and we have more sector rotations from selective hedge funds, and that drive us to have huge euphoria to get to the 1,045 early today. So right now, the risk is definitely not in your favor. I think the risk versus reward ratio is relatively minimal at the moment. So would you be testing your luck? I would say no, but I would still use the frame of reference of below, right? 894, 850, and 800, right? And I think as we cool back down, I think we need to like relatively deplete even more, right? And I think, is it logical to take some profit? I think yeah, maybe take some, maybe 40% of your holding off the table, and then wait until it comes back down, right? Which back to earth. I think technically, if you deplete back to that back down to normal, would be, I think the bottom for Tesla should technically be somewhere around like the 800, 768, which I know is a long way to go. It's like that basically like $300 swing, right? But it's very possible we swing up by $115 today. So whatever goes up really, really fast comes down just as fast. So definitely be cautious about how the risk is incurring right now. Do not chase in. It's not the logical play right now, despite how bullish I am with respect to Tesla. I am a strong believer in the business fundamental, the value proposition of Tesla. I think the growth, in the future, EV is going to be one of the most prominent in terms of the market sector, in terms of the percentage of the overall market as a whole. Right, and Tesla is a relatively diversified business as well. It's not just like a car company; it's an energy, emission company, and it's the main mission is to improve our environmental efficacy as well. And that's a really grand mission, right? And with the diversification of the business model and the strong deep bench of management team and the capital, I am extremely bullish on the long term. So if you bought in, let's say $1,000 today, just hold for a long term. You need to hold it for a long term for you to get that return from here. I am bullish on it. I think next 3 to 5 years we should technically see Tesla to be maybe $2,000 to $3,000 a share, right? We might even split again, right? So something to be mindful of. But in terms of like, do you want to incur some risk now? I think you could wait until like the risk is better. So that's really the goal of it. My job is to tell you the truth and not just like tell you to keep FOMOing in and incur not the most logical methodology in terms of risking your money, right? And hopefully this is helpful. It's a short one. I wasn't planning on doing one today, but because it's a good day, so I wanted to obviously keep you guys up to date with respect to one of my largest holding as well. So really appreciate you, and stay tuned for this come up. Take care. Bye.